what would you say like a concrete conform entry when you have a like a low setting to go back up? What would you say like a concrete something you can look for when you have a low?
So when you have a low, like, what do you mean? Give me an example.
For example, like gold, gold GBP USD that's setting a low. Wondering what is a concrete conformation you can say you can look for when it enters a low.
So you're talking about if I'm looking for like a peak formation low?
Yes.
Okay. So for peak formation lows, number one, you got to be in the range of that, 2.5, 2.5 to 4.5 times ADR.
Uh-huh.
Right. So that's the first thing. Second thing is you want to look to the left to find structure.
Mm-hmm.
So you want to have some kind of structure to the left.
Mm-hmm.
Okay. That's the ideal. Uh,
Like a order block or something?
say what?
Like a order block or something like that?
No, just price action structure. So, example,
Okay.
the best way that I could describe it is like, let's say on this one here, this, structure for me would be like, let's say the resets, right?
Mm-hmm.
These would be areas of structures that you can use for peak formation lows. On a pair like this where you've just gone up, right? You're not going to have a lot of structure to work with. So if you look at it from like let's say a daily time frame, right, you can see that the real structure is going to be down here, right? There is smaller structure that's here, but all of this is just one big run up. Do you get what I'm saying? So that's why it's falling the way it's falling. It's falling because there's no structure here to keep it from falling any deeper. You know, so if you look at, let's say, a pair like GU, if you look at GU, is it a coincidence that every time that it goes up into an area of structure, it hits it multiple times because that's where there's structure there, just like on the daily here. Is there a coincidence that why it stops there? Why is it that price action stops here in the same area over and over and over again? You know what I'm saying? So that's what I mean by structure. So if you can find um, price action that's going down, that's in that range of 2.5 to 4.5, and you can identify a clear structure to the left where price action can go to and be within this range, that would be the ideal scenario, right? So those are three things. Then after that, you'd want to have obviously the peak formation low, right, form, and then you'd want to have a 1350 cross, and then you'd want to have also 1 times ADR move from the bottom to where it started to retrace. So let's say this right here, this peak formation low, right? It moved, obviously between the range of 2.5 to 4.5 times ADR. If we turn on, let's say the EMAs, and we go down, let's say to the 1 hour time frame, because that's where we're using it. Here's your cross of the 13 and 50. Actually, what's it? It's this one here. So the cross of the 1350 is right here, right? And then now you want to have what's 1 time its own ADR. So if you go back to this area here, what's the ADR? The ADR is about, 130s basically, 133. So you measure you could see obviously from the crossover, which is here, you're obviously way more, right, than 133. So all of the rules have matched, for this. So you've gone between the 2.5 to 4 times ADR. If you look to the left, there's structure right here. There's the crossover right here. And then from here to here is way well more over than 1 times its own ADR. So you have all those things that I used to just confirm the peak formations. Same thing here, peak formation. I mean, you can, on any peak formation, you could see it's the same thing over and over and over again. You have the peak formation here. You have the crossover. If you measure from here to here, it's 1 time its own ADR. And then obviously it's already moved, from here to here, it's well over its range. And then if you look to the left, we're at structure. Same scenario. If you look at any peak formation, 90% of the time, you're going to see the same thing repeat itself. The more, the more that you can practice, like opening up a brand new chart and just mapping it out, the easier is going to be for you. So the faster you're going to learn. So let's say a chart like, I don't know, CAD JPY or something. If you can map out CAD JPY, you can map out any chart. But if you practice mapping this out, you'll get better at it, obviously. So any chart that any pair that you really like to trade or whatever, go back and just map it out as far as you can map it out. The lessons that you'll learn are ridiculously valuable, and you'll become a lot more efficient at predicting this in real time. The only difference between me and you is that I've just been doing it for longer. That's it. But if you do it right, if you start from, like, let's say current price action, you should be able to map all the way back to the very beginning, as far as back as you can go. And you can go further back now on TradingView as well. So you can go back a lot further now. I think they unlocked like an extra 2 years or something like that. So those things all, what is that, four different things that I look for confirming a peak formation low. And once you do this for a while, you'll start to see them. You'll start to be way more comfortable with them, and you will start to see them. It just takes time, unfortunately.
I appreciate that. That's a quick question.
Yeah.
In reference to that same subject, as far as peak formations and identify them, when you look at your week and you identify red folder news, for example, this week, PMI or whatnot, and you're trying to plan your week out, would you try to frame the idea or try to form your thesis with the idea of those peak formations for either a reversal or continuation kind of happening after the news? Or what would be your some of your thought process in framing your week in reference to news and peak formations?
So I think that, I mean, I can only speak on the USD because I really follow that every single day, because it's my currency and stuff. I know this week, for example, we're not getting any kind of USD news until really until Wednesday. We get some consumer confidence on Tuesday, but the numbers that matter are going to be PMI. That's on Wednesday. So that's going to have the most volatility, because that's what's really going to help these numbers, like the PMI numbers that come out every month, the CPI numbers, all that stuff help, the Federal Reserve essentially make their choices, right? And so depending on the choices that they make, they determine whether our currency is stronger or weaker. So the more things that they have to do to raise interest rates, the longer they have to raise interest rates, it's just going to help our currency, the US dollar, be more stronger. Okay. They're not printing any money. They're taking money away from the economy every single month.
Yeah.
And so as they're doing that, it makes the dollar itself stronger. That's why you see it, dropping essentially. When it comes to like, pound USD or euro USD or whatever, that's why you see that pair dropping, because the dollar keeps getting stronger. Every time that the Fed does something, it's going to do something to either make the dollar stronger or make the dollar weaker. And so for me, I wouldn't expect like a peak formation to form on a lot of these pairs. I think are going to be confirmed when we get that news, because that news, when it happens, right, it's going to move the market 100, 200 pips, right, which typically is what we help, confirm, a peak formation.
Yeah, I
So
appreciate
that's when I would
that.
expect to see, like, to get a real confirmation. Okay, this is going to be, a peak formation form right here because of the news or whatever,
Yeah, right. Yeah, definitely. Because one of my go-to setups is trying to frame my trade ideas off of like the weekly range and kind of, when that peak high of the week or peak low of the week potentially is getting set. So just trying to frame in that news as a catalyst to really, put size on it and make a count and be patient because I trade the majors as well. So I appreciate your time. I don't take up too much.
Yeah, no worries. No worries. So if you live in a, for those of you that live in a different country, Canada, Japan, Singapore, whatever country you live in, I mean, you obviously know your own economy way better than I do, right? Because if I don't live in those countries, so you guys would know, if you live in Canada, then you should know, what the Canadian dollar and what the Fed over there is doing for the Canadian dollar. So I think it's always easier to trade currencies that where you live, because obviously you're actually living in that country, so what it's like, what the economy is like in that country. So it makes it, I think, easier for you to trade, especially in in the world where we are right now, with just everything's just very bad. Anything that you're struggling with. All right, so if we're starting off a week here, what's the first thing that you need to do? We're starting off brand new. What's the first thing we need to do?
Find out. I think we find our peaks and ADRs.
Right, you need to find out the peaks, ADRs. Basically, you need to find out what is going to be your essentially your directional bias, right? So we need to find out what is the directional bias on this pair. So where do we start from that? And let's make this, where is our closest peak? Would it be here, down here, up here? Which one?
It's gonna be that. It's gonna be that previous high.
The previous high right here, right?
Yep.
Okay. So that's the closest peak that we have here. If we go back, this is averaging what, 150 pips. We're looking somewhere in the range of 450, give or take. All right, so this is 421, and back here was averaging, I can already tell you what this is going to, so this is going to be a peak formation low. This one up here is going to be a peak formation high. Now this from here to here is 307 pips. It's averaging, I would say, maybe in the 135s, because we have 132, 140, and 143. So we'll just say 135. That's 2.2. That's not enough. So this would be a reset here. And so now if we measure from here to here, it's 310. Divided, this range here is actually more. I would say it's at least in the 147 range, give or take, right? So this is only two times ADR. So that's not even our peak. Our closest peak is right here, this reset. Does that make sense to everybody?
I got it now.
Yes?
Yeah.
Okay. All right. So if that's the case and we're coming off a reset still, then what are we looking for? What kind of setups are we looking for?
Well, we looking for buys away from that peak.
We're looking for buys away from the peak. Exactly. We're looking for buy setups only that are going away from that peak formation. And so if we're, let's say, doing 145, we're trying to get into the range of like 400 and some odd pips. So we're looking, to get pretty up here still. So let's just say somewhere in this range up here. That's where our completed cycle is, somewhere in that particular, range, let's say. Somewhere in that range. It could be a little bit below, it could be a little bit above it. But somewhere in that range up there, 82,500 or so is going to be where we should start to look for, let's say, like a peak formation or whatnots to form. Okay, so far, does everything make sense?
It is to me.
Okay, all right, cool. So now we get to this day here, start of the week. Okay, based on what you have there, what is the only possible solution, or what trade setups would you need if we're looking for buy setups based on what you have on your chart?
I want to say a type 4 or a type 3.
Right. So we're looking for buy setups only, right? We're already above the range. So we only could use either a type 4 or a type 3, one of those two. Right. So that's essentially what we would want to see.
I'm about to wait for a close above the 13.
Close above the 13. Okay.
Yeah.
Anybody else? Anybody else have any different thoughts about this? Or is this enough for you to get into a trade on?
I mean, I'm aggressive. So, I mean, in the case, probably. But that's just me.
How about now?
No, I definitely will.
Yeah, I would.
I definitely will. That's the second entry for me.
So you have two different scenarios, in the sense of, the one scenario is you can take it as a railroad track, right?
Mm-hmm.
If you're looking for a 2-to-1, you're basically just trying to get back up to the highs. Okay. Depending on where you put your stop loss at, let's say if you use a 15 pip stop loss, right, you'd be looking at the upper highs of this. Obviously, there's a couple things that you have in your favor in the sense of, you have all of the EMAs that are sitting here that are basically acting as a roadblock, right, to price action going lower. You have the directional bias in your favor, which is great. And then you have obviously a huge move that happened early on, right, starting from Asia, and then you get basically one pullback, and then hopefully we're seeing if this goes higher. Okay. So if you get into it after the railroad track, you don't have a pullback, obviously. You can use a 10 pip stop loss. It honestly, It's going to depend on what your spread is from your broker. So if your spread is high from your broker, then you want to give it more room. If it's smaller, then you can give it less room. It's just completely up to depending on what broker you use. But ultimately, you just want to get to, you can get a 2-to-1 just to go up to the highs. That's one. The other one is if you go off of this one here, okay, for me, this one seems a little bit more higher because this candle obviously is bigger. So I would like the next candle to provide a pullback. If it can provide a pullback, I don't know, let's say half the candle, you kind of basically get the same exact setup as before. And the same thing, a 2-to-1 basically goes up to those highs. Okay. But ultimately, it's going to boil down to whether or not you actually get a pullback on that next candle. So you do get a pullback on the next candle, right? So you would buy on the pullback of that candle. Also, keep in mind as well that towards this end as well as you're getting towards the edge of the box as well. So, all right. So this candle here took you out already. Either one, it didn't matter, right? So you get out of the trade there at the end here, at the very top of this. So now you're into the US session. Now, if you're trading the US session and you walk into this situation here, what's the only scenario that you would have for a trade setup?
Continue.
What would you need for a continuation?
Probably a small pullback.
Pull back to the 50.
Well, you need a big pullback, right? You would need a big pullback down here. Do you get what I'm saying? So it'd be something like that. For me, if I'm walking into this this day here in the US session, the good thing about the US session is that for me, depending on where price is, I could trade both directions. You could trade either buys or sells. Okay. So being that price is all the way up here near the high, right? I'm going to assume that this is the high of the day based on where I'm walking into this at. Do you see what I'm saying? Like I'm walking into this day here, and obviously we're pretty much at the high of the day. Would you agree? Depending on how we get a reaction up here, we could see this as, or I could see this as a multi-session. Let's see a couple more candles first. So you see what I mean? How this went up, gave you the wick there, came back down again. Now, if this is going to be a continuation trade, price needs to hold this area here. Okay. If it doesn't hold this area, it's not going to be a continuation trade. So that's not a continuation trade. It would have been a multi-session. You see that? So depending on what time you come in, for me, if I come in this early and this is what I see, my mind automatically thinks multi-session. If I were to came in, could be thinking something else. You see that? You see the difference that basically like what 45-minute makes? Again, still looking for buys. Based on what you see right now, what are your options? Let me know in the chat. What are your options? Or speak. I don't care. What are your options?
I'm either expecting a trade out of the edge or a type 2 later in the day.
Right. So right now, I'd say the same thing. I'd say either trade out of the edge or a type 2. You're right. It looks like it's not wanting to go any further down, right? It's wanting to stay in this area at the bottom. So if it's a trade out of the edge, what is it that you want to see? Because if it's a trade out of the edge, I mean, you'd basically, to me, this would be the first leg here, and this would be creating the second leg.
At this point, just give me a green candle and a 5 or 13 cross. And and that's not what happened.
What do you think about that, though? Just because it doesn't happen when you want it to happen doesn't mean that it's not going to happen.
I mean, I would have came back and probably just waited for a pullback.
Because you have to
That
think
can that candle
box
right there
here,
was just convincing me.
because this box here's this is only 315, 330. Why would this candle I think this is what you guys got to think about. If this is going to be a trade out of the edge, right? What do you have? What are the things that are going in your favor? Start listing the things that are in your favor.
The EMAs, the candle patterns.
So I'm talking about like let's say a form of like confirmations, right? What confirmations do you have?
Okay, so I got a little bit of divergence. First leg coming out of Asia. Second leg in London.
Right? You got divergence. You have the first leg. Potentially this right here could be the second leg.
Yeah.
You have five or more candles, right? Between the first and second leg. The timing of it is good also because this candle is just a 330 candle. So that's good. You have directional bias, right? You have the TDI also doing the same thing. You can use the EMAs as take profits, right? So you got a lot of stuff here, a lot of stuff. So what would this look like? You know, is that a trade that's feasible just by looking at that? 27 pips. You're gonna have to go to at least, you know, the 800 to make this work. Or if you have a pullback, then makes it more reasonable, doesn't it? So difference on a pullback, you know, makes this trade way better, you know, than without a pullback. So you do get a pullback on that candle there. So the trade looks like, you know, would basically look like something like this. A 2-to-1 to the 800. Now, how many of you think about this? This is where the psychology part comes into play. How many of you would have gotten out of the trade in this box?
I ain't even gonna lie. I would have been mad.
Me too.
I think you already know what this one would have been. What would the trade been here? Kind of went too fast, but
Say it's type 3.
right, it's a type 3, right? Yeah, railroad track. I mean, this is super early, but and it's pinning to the 800. There's a couple things that I don't like about it. The fact that it's not at the 50 on the TDI. It's kind of like a big turn off for me, but I mean, the trade is there. I mean, that's 40. So it went up to damn near 50 pips almost. All right, so if you're entering the US session, and this is what you're seeing, what are you thinking about? If you walk into the US session, this is what you see. Nobody knows.
I mean, I wouldn't do anything with it. If I was, I'm waiting for a pullback to the 50 because that's my favorite EMA personally.
Okay. Well, so here's what I'm seeing on this. Kind of the same similar as the other one where you have divergence here on the TDI. This could very well be like a multi-session, you know, setup as well. You can use the EMAs as take profit also, you know, to come down here whatnot. The question is, where's the entry? I don't have an entry yet. Yeah, I wouldn't have an entry yet. So I think that's probably going to be an entry right here. This is You can think of this as a 1, a 2, and this, you know, could be the only entry you would probably have is a railroad track that doesn't want to go up and touch these higher highs again. So the question is, though, does it make sense? Does the entry make sense? Can you get a 2 to 1 here? Even if you go up to the highs, right, all the way up here above the wick, even doing that on a railroad track without a pullback, you can get over 2 to 1 by doing that. So a 2 to 1 would be like, you know, here. So would that be a trade anybody here would see? So you got 1, 2, 3, 4, 5. This candle would have kept you into the trade. 6, so you're still in some profit. And shit, it ended up going all the way down. So it looks like the trade was right. They just went back up to grab another more orders before dropping it. I am assuming that this right here is news right here because it's 2 o'clock. So I'm just going to assume that that's what that is. All right, so far, look what's happened so far. So what's happened? What has happened? We've moved down all the way to where?
We back down closer towards our reset, where our reset formed, right?
Right, right.
And I believe we got a new peak now. If the ADR is in tune with
Right.
it.
So that means that this right here would be what?
It should be our new peak formation high.
Right. But what does that
And
make this?
That make that a
Failed
peak.
reset.
Right.
Failed reset. Okay.
Right. And so we're averaging 140. So it's about 420 that we're looking for. 420 is basically where this peak formation low is. Do you see that? So what should we be looking for?
Sells away from the peak.
Sells away from the peak. This is, I think, Thursday now. Anybody see anything? Does anybody see anything at all? So last day, last day of the week. All right, what's our best option for looking for sells? What's the only option if we look for sells? If we're looking for sells?
I don't know.
The only option here, if we're looking for sells, where price action is, would be a type 3. It's getting stuck every time it hits the middle of the range. So like right here, it's hit it 1, 2, 3 times in a row.
So type 3 can just sit there in the middle of the range and reject.
It's just rejecting, 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 rejecting. That's all it's doing.
So multiple rejections is still considered a type 3.
Yes. Yes.
Copy.
The only thing that I don't like about this one is that the 50 is below, not on top. That's it.
That's my main problem with that.
Yeah, that's the only thing that I don't like about it. I mean, does the risk to reward ratio is... I think the risk to reward ratio would be fine with the pullback. If you get a pullback half the candle, let's say, I mean, that would be, you know, you'd be doing something like that. Right? That would be something doable. But it would only work if you get a pullback. So like that. And then there you go. I mean, that goes really big. That's like a 90 pip move, almost 100. So in 1 week, you have 1, 2, 3, 4, and 5. 5 trades in 1 week. Alrighty, so I will then see you guys next week.